All right. What is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about GD. This is General Dynamic Corporation. I really like this stock a lot right now. And I was waiting for earnings to potentially get in. And we did get a good earnings reaction today on the stock. All right. We had a very strong move up. And we're perfectly right here at a specific trend line that I'm paying attention to. If we can get out above here and above this key level here, there's lots of upside potential, and I do think it's very possible this stock could head up to around the 245, 246 region later this year, potentially by the end of the year, if not sooner. So please be sure to smash that like button, subscribe to the channel if you guys are new. We're also going to dive into the fundamentals of the stock. All right, we're going to take a look at the PE ratio, a couple different things like that using today's sponsor, which is Simply Wall Street. We'll head on over to the platform and you guys can get a 14-day free trial using the link in the description and up to 40% off for the first 100 people that join. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. So we're here on TradingView right now, and we are going to go over a nice detailed technical analysis and break down everything that I'm looking at and why I think it's possible we could come up to this region here. But before we do so, all right, we need to take a look at some of the fundamentals of the stock. So let's head on over to Simply Wall Street. And Simply Wall Street is a really great platform. All right, I've been using it for a while. Definitely glad to have them as a sponsor. And it looks very good. Okay, when you look at the snowflake analysis right here, you can see that from a value perspective, a dividend, and its financial health, it does look very good and promising. And two of the areas where it's lacking is going to be future growth and past performance. Now, at a quick glance, okay, we can see here that there's many rewards. Okay, it's currently trading at a good value compared to its peers, pays a reliable dividend. Earnings are forecast to grow 8.72% per year. And then it's trading at 29.9% below the estimate of its fair value. So let's actually dive a little bit deeper into that. And let's scroll down here. And Simply Wall Street gives you a nice little, price chart history. They also give you recent news and updates. They have lots of news covered here. And if you take a look, you can see the shareholder returns versus the sector that it's in, as well as the overall market itself. All right. And then you can see the volatility here. So this stock is really not that volatile at all. It's lower than the industry average volatility and the average market volatility in general. So it's much lower than both of those, averaging about a 2% move over a week per week. Now we can see here that it's currently got an 18 price to earnings ratio, 18 PE ratio, and a 1.5 price to sales ratio. And we break down the earnings and revenue right here. You can dive a little bit deeper into all of that. But when you look at the valuation standpoint here, and we talked about on that snowflake analysis, that's really one of the strong points. The price to earnings versus its peers versus its industry, the price to earnings versus its fair ratio, all of those look really good. And you can see here, these are some of its peers. The peer average is at 30.8 for the PE ratio, and General Dynamics is here trading at 18. So it does seem like it's a good value based on its price to earnings ratio compared to the peer average. If we go down and look at the industry average of 26.6, it also seems like it is a good value based on its price to earnings ratio compared to the US aerospace and defense industry average. When you take a look at the price to earnings versus its fair ratio, the fair ratio they have right here at 23.5. So all of these are suggesting that the stock is not currently overvalued. Now, of course, you would have to dive a little bit deeper and do some of your own analysis, but Simply Wall Street has a lot of their pros doing the analysis for you if you guys aren't a pro, and they make everything super simple and easy to understand while also giving you guys some really nice graphs. Now, the fair value they have here is at $317. That's a significant, boost in the price right now. And it'll be really interesting to see if we can see it come up to those price levels. Now, if you take a look at the financial health also looks very good for the stock. We'll go ahead and look over there. Okay, and you can see, basically all of the criteria checks that they have here. Their short-term liabilities and long-term liabilities, reducing debt coverage, interest coverage. They get checks on all of those, but their debt level overall is kind of high, which is why they get an X here. But overall, getting 5 out of 6. Now, that's just a quick summary of, some of the fundamentals of GD, of General Dynamic, and why I think that it is a potential good play. Of course, do some more of your own research. And don't forget, you guys can not only use the link in the description for a 14-day free trial, you guys can look up other stocks on here as well, not just General Dynamic. You can look up maybe a stock that you've really been wanting to own, or maybe some stocks you currently own, and you want to dive a little bit deeper into some of the fundamentals. Simply Wall Street's got a really great platform, and there's nothing to lose, right? You get that free 14-day free trial. And if you do choose to purchase, the first 100 people will get up to 40% off. That makes for the entire year, if you get the annual plan, it comes in under $200, very affordable. Now let's go ahead and dive into the chart, okay, and get into some of the technicals. Now, I've had these trend lines here for a minute that we're watching, and you can see we actually broke through this first one, right? We tested it over here, here, and here, 3 touches on this trend line, and we just broke through it today, and we closed exactly at this other trend line here from back in the day right here, right? We can see we have these 2 touches, and if we zoom in, you can see that that's pretty much exactly right where we closed at. Now, we are currently above this 221 level right here, 221.56. This is a key level that we needed to get above. All right. This is our 61.8% retracement level. And, once you get above this 61.8, and if you can flip this to support from resistance, then the odds of getting 100% retracement are much more in your favor. Now, 100% retracement would take us back up here to about 233. So, lots of potential there. All right. But we need to be cautious of the 78.6 retracement level, which is going to be 226.77. That ultimately is going to be our last major resistance level. And if we get above there, then most likely we're going back to that 233 region. All right, now on a bigger picture, I do think that we can come up here potentially to 246.79. That's going to be the gap fill. And if we actually zoom in a little bit more, we can draw this up just a tiny bit more. All right, and we'll go ahead and call it 247 is going to be the gap fill. There's a gap in between these 2 candles. If you're not familiar with gaps, I love trading them. They typically fill 90% of the time historically. The big question is when, not so much if they're going to fill, right? You can see we initially gapped down over here on a previous earnings, right? And it took a long time for the gap to fill. This was back in April of 2023. And now here we are today in July, and we see that that gap has finally filled. The stock has been on a pretty impressive rally here ever since May. If we take a look, it hit peaks of about 11% there. But I think that this play could potentially just start getting running, right? A perfect world textbook scenario here would be a break of this next trend line right here. So we would get a break and then a retest of our 61.8% level, and also a retest of the trend line here. So perfect breakout retest, get through this 226 level, and then get that 100% retracement, at which point we would be evaluating the stock. We can see we initially had some bullish divergence here, right? So we have a low here, we have higher lows right here. But if you look at the actual price of the stock, we have lows and then we have lower lows. So when you're creating these lower lows on the price, right, and essentially prices going lower right here, but you're increasing in relative strength, making higher lows. This is a simple term known as bullish divergence, and it played out very nicely. You could also say this was a little bit of an inverse head and shoulders. Maybe not the cleanest, but if you wanted to say it was there, you could say it was there. Left shoulder, head, right, and then right shoulder here. Break through this neckline, and we got a strong push to the upside for that gap fill today. So really liking a lot of the things that I see on this from the technicals. Still lots of resistance, all right? We can reject this and head back down to the lower end of the range. That's definitely a possibility. But, from a fundamental standpoint as well, we took a look at some of the fundamentals, and it does seem like this stock potentially could be a good value. As always, do your own research and dive further into if this is something that would fit your portfolio. Let me know you guys' thoughts on this stock in the comments down below. All right, smash that like button, subscribe to the channel for more. And if you guys ever want to do a one-on-one personal coaching session, I do those every single week, and we can work on scheduling a time together. Feel free to shoot me an email, zachleetrades@gmail.com.